All right, folks, it looks like things are starting to hit the fan. People are freaking out and have changed their positive view to now a more negative view on the economy in only 2 months. Remember, we had the big surge in economic optimism after early November, but since then, it's been kind of a downhill type of view now on the economy, or I should say uphill, depending on how you look at it. But let's go ahead and get into it, folks. Credit card defaults, 14-year high. This goes back to 2010, folks. And that was just coming out of the great financial crisis. Of course, we saw the housing bubble go bust. We see the economy had dipped down for a while until everything was reinflated with rock bottom interest rates, backstopping the banks no matter what. All right, so we're going to get into that and a lot more. A lot of other news to get into today. And let's go ahead and start right here. Credit card defaults, 14-year high, folks. Let me move myself out of the way. 2024, folks. Look at this. All the way back to 2010. And look how far above the previous few years we are. I mean, we didn't just beat the previous years by a little. It's like double what it was in 2021, 2022, well above 2023, and almost as bad as 2010. So looking at this increase from where it bottomed out, remember stimulus checks, freezing of payments, 2020, 21, 22, everything that went along with the health crisis and the backstopping of the economy or the propping up of the economy. Now we've been in an uptrend since 2022. You think 2025 is going to just go back down, or is it going to continue upward just like it did 2008, 2009, 2010? If you're looking at the chart, I'm pointing to each one of these bars on the bar graph for each year. I think it's going to go much higher, folks. And there's some things happening right now that are also telling us that many more people are also believing things are about ready to get a lot worse, folks. We told you this was going to be a time when we've seen massive changes like we've never seen before. In fact, a judge just blocked the current administration's attempt to do a federal hiring freeze, or funding freeze, rather. Let me get into that data here for you right now. Now, in an attempt to cut costs and cut spending, the current administration wanted to freeze federal grants and loans, but a judge went ahead and blocked it. Now, some people may say, if a judge is just going to override everything, why even have a quote unquote leader trying to do these things, right? So it's pretty interesting. But a lot of things that are being talked about are really going to throw a monkey wrench in the gears of the economy. A lot of the federal workers being let go and given 2-week notices, being laid off essentially. What's that going to do for the economy when that amount of spending is pulled away from the economy, right? And maybe they'll get unemployment and benefits. They'll still be able to go out and spend even without jobs. But when that many people lose their jobs at once, folks, it's going to have a pretty big impact on the economy and spending. And of course, you probably know, if you've been on this channel, the economy is based on spending. Economic growth is based on spending, mostly consumer spending. That's about 70% of GDP. The gross domestic product is consumer spending. So when big job losses happen, or when credit gets cut off by the banks, that's when you see the economy go into a tailspin and start to dive. Of course, the banks are still lending money out there, even with credit card defaults at 14-year highs. And, will they keep loaning out money? What's your guess? I mean, some people say this is close to the end. It's got to end soon. We've been looking at these types of things for years, and it never seems to end. There's always new ways to kick the can down the road, of what it seems like. And that's when you get to the other people that say none of this even matters, because they're just going to print the money to give to the banks that are suffering the credit card defaults. So it doesn't matter if the whole country defaults. They're saying they're just going to print enough money to keep the banks loaning out money to infinity. But that's when you get into inflation, folks. You get into hyperinflation when you start doing that for years and years. And so far, things are being held together somehow, duct tape, maybe even Scotch tape. But they're holding it together somehow, some way. But we're seeing big cracks, and we're starting to see a lot of people change their opinion and change their view on the economy. Let's take a look at this. Out of Wall Street Journal, U.S. consumers lose confidence at the start of the current administration's second term. So people are changing. Economic outlook surveys are showing pretty big drops from just a couple months ago. And from this article, we have this guy looking at food prices. Looks like he's reading the label, whatever. Confidence among U.S. consumers weakened for a second straight month, reflecting retreating optimism. That's the word I was looking for earlier. Retreating optimism of both current and future conditions at the start of the current administration's second term. Expectations that inflation will rise again. So like I said before, we've got a battle right now between deflationary and inflationary forces. A lot of cheap labor leaving the country. Some people say that's good because you're going to get a lot of other people jobs. But when farms are having food rot because no one's there to get the food, to pick the food, to ship the food, most of the shipping companies or the shipping warehouses, the packaging warehouses, a lot of people don't want those jobs. We have a lot of people in this country, they have degrees, college degrees, and they feel like they're above packing food. They feel like they're above working on a farm because they have this little piece of paper, this degree, and they say, no, I need to work in an office somewhere. And a lot of people don't want to do those types of jobs. So we're going to see, I think, a lot of fireworks, a lot of fallout from what's happening right now with the current administration. It's going to be very interesting to watch nonetheless, but people are starting to feel this. The index of consumer sentiment published by the Conference Board, a research group, fell 5.4 points Tuesday. It's worse than 106 points they expected by economists that were polled by the Wall Street Journal. This measures consumers' expectations based on their short-term outlook for income, business, and labor market conditions. So we're going to see how this plays out, folks, but people are starting to feel the effects of what's happening already. And we've only been doing this new administration activity for a week now, a little bit more than a week is all. And there's this trend now on social media and this phrase that's basically kind of going viral. Americans pledging to buy less or even nothing. And this is again out of the Wall Street Journal here. People are tiring of overconsumption and want to pay off debt. Americans pledging to buy less or even nothing. So it's trending out there. What are they calling it on social media? They're calling it, it's in the article here, No Buy 2025. No Buy 2025. That is the trending catchphrase, right? The trending hashtag on Instagram and other social media platforms. People are very cautious now. They're starting to become cautious. So will we see pullbacks in certain types of spending? Well, yes, we're already seeing the retail sector. Look what's happening in retail. We've got Kohl's, the store Kohl's, kind of pricey compared to Walmart and other lower cost places where you can get clothes. I think even pricier than Target, maybe not. I haven't been to a Kohl's in a while. Look what Kohl's just announced, though. Struggling Kohl's announced layoffs at corporate headquarters, and it's about 10% of their corporate staff. In a message sent to employers, the retailer said about 10% of roles that report to the corporate headquarters have been cut. More than half of the reductions came from closing open positions, and this is about 4,000 people in the workforce, so it's about 400 out of 4,000. But remember, this comes on the tail of sales being down 8.8% when Kohl's reported their end of the third quarter 2024 numbers. Sales down 8.8%. So we're yet to see the fourth quarter numbers, but something tells me based on these layoffs that the fourth quarter numbers are also going to be pretty big drop with the store Kohl's. And I think Kohl's is a little bit pricey. I've bought things from there, and it just seems like people that are barely scraping by are going to be less likely to go to Kohl's and more likely to go to Walmart or maybe even to the thrift store. We know that when economies turn down, thrift stores see a big uptick, and of course stores like Walmart, discount stores, etc. And back to Kohl's, what's kind of interesting is the CEO stepped down last year before the third quarter earnings came out. So interesting timing. And remember, 2024, we saw a record number of CEO departures. And I think the CEO from Kohl's was just one out of about nearly 2,000 CEOs that stepped down in 2024. And for those of you that have watched these reports throughout 2022, you remember covering headlines like this: CEO exits up at unprecedented rate, study finds. So connect the dots, put two and two together, and we see that things are falling apart. Even though many people, without looking at these details that we look at, many people aren't realizing it. They just go out and they see people are spending money, people are driving their cars around, still a lot of traffic on the road, people are affording to fill up their gas tanks, stadiums full of people watching events, restaurants full of people waiting in line to get to the restaurant, folks. But folks, it's driven on debt spending, debt-based spending, and it can't continue forever. And therefore, we're seeing credit card defaults at a 14-year high, folks. It's just going to continue to get worse. Nothing that's being done right now is actually going to fix the cost of living situation as far as I can see. And I hope I'm wrong. If I'm wrong, please let me know down in the comments. And I'll be glad to check out your data or your facts or even your opinions. But all the details that we're bringing up here, I mean, I think this is the correct prediction here. And I'm not in the business of predicting. I'm just in the business of seeing what's already happened and reading the news and just looking around myself and seeing what's happening just in my local area here. All right, but with all this information coming out now, it's finally sinking into people. People are finally starting to realize, I think, that it's just a matter of time before we see some big fallout from what's happening. I mean, for such a long time, people thought that gravity didn't exist. So something, just going to grab my cup here, something in the air seemed like it was just floating. Something like this cup right here. Isn't this a nice cup? My daughter got this for me. Incredible Dad. I'm an incredible dad. Cool cup, huh? Just floating in the air, and we're talking about the economy, never dropping. So it seemed like the economy was defying the laws of gravity. The cup is just floating in the air. Now we're finally starting to see gravity take hold, and the cup is starting to drop. And it was inevitable, but yes, for a while it did seem like they could just keep this thing propped up forever, defying gravity. But we're starting to see, I think, the rubber hit the road here. And let's go on to some other information here to further back this up. All right, and also just kind of a reminder here, because we talked about this in a previous report, Americans struggling with credit card debt, record number. Let's highlight that, record number, only making minimum payments. And now you know why the current administration wants rate cuts. They want lower rates. They see this whole thing is going to fall apart on their watch. And what will they do to stop it? I don't think there's much they can do. But we're going to find out. We're going to find out very soon. Also, what else did we just find out recently? For those that didn't see my previous report, we found this out. Working Americans, record surge in dependence on food banks as inflation battle wages on. Right? So we're going to see how this plays out, folks. But all these signs are pointing to people are starting to freak out, and people are starting to get behind. People are starting to get desperate. And next, let's go into the housing bubble, home prices, real estate, folks. It's actually worse than I thought with the 30-year low in sales right now that we're seeing in real estate. Look at this here. Recent report here out of Remax. 71% of real estate agents didn't close a deal last year, folks. 71%. So real estate agents, for the most part, are not real estate agents anymore. They may still hold their license, but they're not doing any transactions. So obviously they have to be doing something else. Unless they made so much money on their previous transactions and are living off previous commissions, 71% of agents are working another job. They're not really full-time real estate agents, right? Not even part-time. 0 transactions in a year, folks, 71%. What does that tell you? The bottom is falling out of this thing. Again, like the cup, it seems like it's defying gravity. It's floating in the air. Let me make it so you can't see my hand. Let's see here. Anyways, folks, it's not defying gravity for much longer, because it looks like finally things are starting to hit the fan. The rubber's hitting the road, whatever you want to call it. Gravity started to take hold, and we're starting to see some action here. And are you all ready for the biggest news of all? Let's bring this up here. The CEO of Duck Donuts resigns amid corporate layoffs, folks. I didn't know there was a Duck Donuts. I thought it was kind of a ripoff on Dunkin' Donuts, but there is a Duck Donuts. And they have 100 locations throughout the country and internationally. So more CEOs resigning, folks, 2025. So I think it's going to get worse. And we're going to continue to keep an eye on all this information, all this news. But I'd like to hear from you down in comments. I mean, come on, what do you think? 71% of real estate agents didn't do a transaction last year. We saw in the housing bubble, 2008, 9, 10, how many real estate agents just let their licenses expire. They were no longer licensed. And we started to see that happen at the end of 2024. It was, I think, 200,000 real estate agents basically dropped out of the game, folks, with over 70% of agents not doing a transaction. This could be the beginning of something even worse than the financial crisis. But again, it depends on how the powers that be react to this. Because if they react like they did in 2020, where instead of letting prices come down with all the job losses and with all the debt and all the problems that consumers are having, they kept everything propped up. They put a floor under prices. So if that happens again, folks, inflation is going to get even worse. It all depends on how the powers that be react to the unfolding crisis after crisis after crisis that we're seeing here. All right, folks, a couple more things before we get out of here. Saw this article here. Starbucks staff given panic button for laptop lurkers who won't leave. We know that a couple weeks ago, maybe 3 weeks ago, Starbucks reported that they're no longer going to let people just hang out there without buying something. So non-customers are not allowed to just loiter and just hang out there, sit on their laptop. And I said, it's going to be kind of interesting to see what they're going to say to these people that are sitting there on their laptop. They're going to say, pack it up and go. What if they bought a drink and now the drink's gone, but they're still sitting there for 2 or 3 hours doing their homework? Are they going to go look in their cups? Just kind of a weird thing. I can see homeless people not letting homeless people sit there and not consume anything or not being a paying customer. But what about people that maybe come in and they bought something cheap and now they're there for 3 or 4 hours hanging out, and now they're in the bathroom doing a little bath or whatever, like some of these people do. Starbucks staff given panic button for laptop workers that won't leave. It'd probably be a pretty interesting job to be at Starbucks right now. But we heard that Starbucks, some of their workers were talking about striking. And we heard about Costco maybe at the beginning of February. A lot of workers there likely going to go on strike. And before we end here, I just wanted to give you an update on that Costco situation. Costco workers are still preparing to strike at the end of January. As I'm recording this, it's the 28th, so we still have just a few days left. It's not all of them, though. These are the warehouse workers, which could disrupt the supply chain to Costco. Some 18,000 Costco workers in 5 states will strike after the current contract ends on January 31st. And it's the same story, folks. These people are not making enough money to keep up with the cost of living. And now people are finally seeing and realizing that the cost of living is probably not going to come down. The pact has first-year base pay of $17.50 an hour for service assistants and $18.50 for service clerks, $19 an hour for meat cutters, and $21.50 for truck drivers, with 50-cent yearly raises for all workers and a first-year added premium of $1.50 for truckers. So that's what the people are making working at the Costco warehouses. I'm not sure if it's the same at the actual stores, but that's what they're saying here in this article out of People's World, right? So it's getting more interesting every day, folks. Again, like to hear your thoughts down in comments. What do you think about the 70+% real estate agents? No transactions last year. 14-year high credit card delinquency or defaults. Banks writing off a lot of credit card accounts. And that's one of the reasons why we saw a slight dip in credit card debt at the end of 2024. All those write-offs, remember? It was reported as positive news. Oh, people are paying off their credit card debt. No, a lot of the debt was written off. And it was the fourth quarter was the record quarter. I shouldn't say record. It was the largest write-off quarter for all the banks of the year. And we're going to look at more data on that next report. We're going to see how these write-offs compare to previous years. And because is it going to be an indicator of what's to come with the economy, right? Please let me know what you think about all this, folks. As always, keep stacking. Bye for now. Talk to you very soon. Peace out.